The Central Bank of Nigeria has raised its key interest rate to a record high in a decisive move to curb persistent inflation and strengthen the naira. Our correspondent Ngechi Nana attended the Monetary Policy Committee press briefing and has the full report.
To hold or to raise? This critical question loomed over the Central Bank of Nigeria's third Monetary Policy Committee meeting of 2024. After 2 days of rigorous deliberations, the MPC made its decisions.
The committee's decisions are as follows. 1. Raise the MPR by 150 basis points to 26.25% from 24.75%. 2. Retain the asymmetric corridor around the MPR to plus 100 to minus 300 basis points. 3. Retain the cash reserve ratio of deposit money banks at 45%. And 4. Retain the liquidity ratio at 30%.
The committee weighed several factors when deciding whether to further tighten policy or hold to observe the impact of previous rate hikes.
The key focus of the MPC at this meeting remained to achieve price stability by effectively using tools available to the monetary authority to rein in inflation. Further observed the recent volatility in the foreign exchange market, attributing this to seasonal demand, a reflection of the interplay between demand and supply in a freely functioning market system. The committee also noted the marginal increase in the external reserve balance between March and April 2024 and urged the bank to sustain its focus on accretion to reserves. An extensive review of risks and the near-term inflation outlook, the balance of risk suggests further tightening of policy to build on the benefits accruing from previous rate hikes.
This marks the 295th meeting of the MPC and the third under Governor Olayemi Cardoso, who took office in September 2023. Governor Cardoso also outlined the committee's broader economic strategy, emphasizing the bank's stance on key issues shaping Nigeria's economy.
And I can say from every indication, we have, from the feedback we've been getting, and I must say that we've had a considerable amount of dialogue with foreign investors, certainly from the time I came to the bank, and this is something that has been consistent. So we have a pretty good feel of what the requirements are and what they look for. We have attempted as much as possible to make the market a lot more transparent, and transparency in our dealings, which of course foreign portfolio investors want to see, and which gives them the added confidence. And we have seen that they have responded very positively to the transparency initiatives, and that has given a considerable amount of confidence to them.
With the nation's attention firmly fixed on Nigeria's apex bank, there is hope that this rigorous approach to tackling the inflation crisis and bolstering the naira will continue with further policy measures. The next MPC meeting will be slated for 22nd and 23rd of July 2024. Nkechi Nana, Arise News.
Okay, we've had, about 3 monetary policy committee meetings now under Mr. Cardoso, Olayemi Cardoso, CBN governor. And his position has been that as CBN governor, he wants to tame inflation. He wants to ensure price stability. And the approach that he has adopted is that of the orthodox, monetary policy approach. thinking that by, increasing interest rates, by tightening monetary policy, you'll be able to achieve real positive rates. But the question to ask is that in Nigeria, even since 2022, we had more or less adopted the same strategy. Why is it that that strategy of tightening, of adopting the orthodox approach has not solved our problems? The question to ask, therefore, is that where is the missing link? Mr. Cardoso was very optimistic after the Monetary Policy Committee meeting. He said the banking sector is very stable and is very sound. He said that, the volatility that we have witnessed with regard to the Naira, because the Naira has even depreciated further within the last 1 month, that is just a question of the forces of demand and supply. After all, they have told us that the economy will be market determined. The rates will be market determined. And also, they told us that food inflation has gone down, but what has gone down is month on month. But to what extent have we seen that month-on-month reduction with regard to inflation? Now, the CBN governor was also very optimistic that we will see the positive effect of the measures that they have adopted within the next 2 months. But significantly, what they did, they retained the asymmetric corridor, they retained the CRR at 45%, they retained the liquidity ratio at 30%. But the benchmark rate went from 24.75% to 26.25%. However, if you look at it cumulatively, it's the fact that the cost of borrowing is very high. Access to funds is still a problem. And this will be a disincentive for people who want to invest within the economy. The experts have been quoted at length in this day newspaper today, all of them expressing anxiety that this idea of tightening, one after the other, it's not as if it's a self-fulfilling prophecy and it may not yield the desired result. The ordinary man who is not an economist can test his impression in terms of what we face today in Nigeria. They can tell you theoretically, either from the MBS or from the CBN, that food inflation has gone down. But the people who go to the markets, they know better. The people who have to run businesses, they know better. So even at 26.25%, the cost of borrowing is still very high. The banks may be safe and sound, but the customers are suffering. Now, what are the issues here? One of the major challenges that we face with this monetary policy, management is that the approach is unidirectional. It's unifocal. The whole emphasis is on, if you tighten. No. Monetary tightening is not a magic wand. There are other issues, as we have said again and again on this program. There are certain fundamentals that you still have to look at. Nigeria is borrowing, is it at about 19%? What are we doing about that? The CBN governor says that the foreign exchange reserve has appreciated. I think last Sunday I interviewed Dr. Ayoteriba, who should know. And one of the things he was saying is that, look, that foreign exchange reserve has to appreciate more, and that Nigeria should focus more on how it manages its assets and how it manages its equity. I hope I remember some of the things that Dr. Ayoteriba said very well. That we don't seem to have enough sharp focus on what the fundamentals are. And what are some of these fundamentals are? Reducing bureaucratic bottlenecks, enhancing supply chain efficiency, increasing, the scope for an enabling business environment. If there's no enabling business environment, if the cost of doing business is still very high, then of course, people will continue to complain. So there are fundamental issues, there are structural issues that have to be addressed. And some of those other issues may not necessarily be within the purview of the CBN, they may be within the purview of the Minister of Finance. And the Ministry of Finance also has the coordinating Minister of the Economy. What exactly are we doing about fiscal deficit? all the fiscal deficits we're incurring and all of that. So we face a trilemma, as the economists put it. But the major dilemma that we face is that whereas we seem to be seeing more activity on the monetary side, we don't see that proper alignment between the monetary side and the fiscal side. Except you align all of this, then of course it will be like you are just shooting in the dark. And at the end of the day, is a test of the common man, the reasonable common man. If the economy improves, we will see it in terms of increased productivity within the economy. We will see it in terms of increased activity within the manufacturing sector. We will see it in terms of what the markets say. They're talking about, okay, using the capital market for capital formation. But what we're getting is not direct investment. We're just getting portfolio investments who look at the positive risk margins and ratios, and they just say, oh, it's better to make money this way. So Nigeria becomes an arena for speculation. So I think that as optimistic as the CBN governor sounds, there are other issues, the same residual issues that we've always talked about structure, about the fundamentals of how the Nigerian economy is run. Thinking that you can always raise rates, follow textbook, it's not always the best strategy.
So for me, my question will be, President Tinubu, why are you still keeping some of the ministers that are not performing? I'm shocked that it's going to be 4 days or about 5 days. Yeah, let me check now. Today is the 22nd. 7 days to your 1 year in office, and you've not sacked some ministers. In case you do not know, the scorecard of your ministers was embedded in what the CEO, Puyen, of Total said, that Nigeria is not ready. They talk too much, they debate, they have a lot of laws over the place, no skilled workforce and all of that. And I'm taking my $6 billion to Angola. Those ones are ready. About the last deal I did, it's not me speaking, it's Puyen speaking, it's a China deal, which was over 10 years ago, which was done in collaboration, with Saipem, about $3 billion, and the money was also even bigger than that. So the question is, at first, if you really want to show you're working, sack some ministers or reshuffle your cabinet, as the light word they use it. Because you see, Mr. Cardozo cannot do more than what he's doing as we speak. Most of the problem are for the fiscal side. Take, for instance, the best he can do is to spur on this foreign portfolio investment like he's been doing. That's why at some point Goldman Sachs was praising us, but we're incurring more debt because the foreign direct investment, the bond yields, as they went up, we had to pay the interest on the bond yield that has accrued to about $1 trillion. So he has done everything within his power to stimulate. But if the fiscal side is not meeting Mr. Cardozo, the best Mr. Cardozo will come and do every day when they have monetary policy meeting is to give you hope that things are getting better. When in all realistic terms, things are not getting better. Mr. Cardozo has seen the shortfall of even trying to defend the currency, and at some point, he's seen that probably there's a cul-de-sac because the BDCs are complaining that they're even having a hard time getting those $10,000 the CBN said they were going to be giving daily. So he's probably run into problems there. Now he's talking about market forces. But this was the same Mr. Cardozo some months ago that said, as at the end of February, we're going to start giving $20,000 at first. They should sell at a certain rate to be able to bring back this. But he's hit a cul-de-sac there. So we are leaving that now. And he's also gone further to tighten. According to the textbook definition of economics, when you have inflation, they look at it and say, probably there's an attendant problem with liquidity. So they say tighten, they raise interest rates so that liquidity will not flow out as possible, so that people will not be able to go to the banks, they will be distracted from going to the banks to borrow at higher interest rates, and that liquidity will not be put into the economy. But this was the same government that reversed everything Emefiele tried to do when we had a crisis with liquidity, where we had excess liquidity in the system because of their own convenient gains. Money in circulation has also increased. You are having all of that, then you are trying to tighten now as we speak. But the problem Mr. Cardoso is also having that he's tightening in a low growth environment. There's no, look at the poultry growth, 3.5, thereabouts. It's not growth that is bullish, that can bring the economy. President Tinubu promised a sizable number of economic growth. At some point, I think they said 12%. Now, I think after when we asked them again, they scaled down to about 6%. So the manufacturers, the entrepreneurs are complaining. Likes of Muda Yusuf and other people are complaining. But what would you rather he should do at a point where things are stifled? And he doesn't. Really, in all fairness, I feel for Mr. Cardoso. He doesn't have the magic wand to be able to pull the fiscal side. The Minister of Trade and Investment is supposed to bring the trade and investment. It's not trading. We are not seeing the investments. They said they went to Maersk the other day. They announced a deal that it was a Pabo deal. Pabo Lojasi. All the deals they announced, maybe some ray of hope with the partnership Sadiq have been having, the Saudi Arabia have been having with Olam. So we are not seeing the major deals to be able to pull the economy, which is foreign direct investment that we need. And this was Nigeria as at 2015 thereabout, used to be the third or the fourth on the list of foreign direct investment on the African continent. So it's in a cul-de-sac. Mr. Cardoso will not solve the problem of food inflation. Anyway, food inflation, as we speak today, some people are stylishly jubilate that it's going. Food inflation is not going down. What is happening is that the rate of rise in food inflation is what went down. It's not that food inflation is over 40%, which is a sad one for any country. It's the rate of rise that has plummeted a bit. Mr. Cardoso will not fix the legacy problem of food inflation. It's not his fault to do that. He can't do that. He can't be the one to fix the roads that will bring about the agricultural problem. He can't be the one to fix the insecurity problem that is preventing farmers from farming. So it is still the same government that must do. And if they have other ministers that are not performing, we should do it. Except if now we want Mr. Cardoso to behave like the last CBN that is now trying to pull everybody together, the agric ministry, but which we've said he shouldn't do, and he should focus on his what he needs to focus on. So I think the ball stocks at the desk of President Tinubu. As we go to celebrate 1 year, the ministers that you said if they don't perform, they will be reshuffled. I think it's best to reshuffle them. So like we even see that you are doing something, that you're even responsive, because some ministries are just as dead as dodo as we speak. No work is coming. It's just a lot of activity and announcements. And we can't live a country based on propaganda that you have over 33% inflation rate, a lot of pain, low growth climate, there's no stimulation of growth and other things. It's just as if it's a limbo. And we just keep waiting for inflation to keep eating us up. And at the same time, we're looking for revenue. We don't have FDI, so there's a problem. Crude oil production is plummeting, challenges here and there, insecurity, strife, pain, and misalignment by government. Because in all of this, too, the government still have the nerve to use 90 billion to subsidize hard travel. And I'm sure when the Christians come and ask for theirs, or the Sheshe people ask for theirs too, you will say, oh, what is it? So, Mr. Cardoso, I feel your pain this morning, but also the government too must have to step in. Other news making the rounds this morning. The organized labor yesterday rejected federal government's new minimum wage of 54,000. A member of the committee representing NLC, Professor Theophilus Undubaku, said the labor has maintained a position on its demand for 615,000 as new minimum wage. National Chairman of All Progressive Congress, APC, Dr. Abdullahi Ganduje, yesterday said while it was not an election period, the party's leadership was already working to secure President Tinubu's second time for consolidation. On the foreign scene, UK inflation has fallen to 2.3%, just above the 2% target, the lowest level in almost 3 years. And new strains of COVID-19 are spreading globally, raising concerns about health professionals. A possible summer spike in cases 4.5 years since the onset of the pandemic.